Banks are making it harder than ever to get a home loan. So in this video, we're going to take you through why they're making it more difficult, the things that they're looking for, the questions that they're asking you, and more importantly, how to get a home loan approved in 2020.
Let's dive right in. Hey guys, it's Nathan and Jayden here from Galloway. Thanks for watching and be sure to hit that subscribe button.
Getting a home loan during COVID isn't impossible. In fact, we're still getting people's loans approved every day. But why are some people finding it more challenging to get a home loan approved in 2020?
That's right, Jayden. The first thing that we're seeing that the banks are critiquing more and more recently are people accessing their super balance. So Jayden, why are the banks critiquing this and why is this making it harder to get a home loan?
Yeah, so the government released some special provisions earlier in the year that allowed people that have been adversely affected by COVID to withdraw $10,000 in last financial year and $10,000 in this financial year from your super fund. So what we've found is a lot of people have tried to then use this money to pump up their home deposit and said, well, I've got 20 grand now, why can't I use that towards my home loan deposit? Nathan, why is that an issue for the banks?
The banks are actually looking at this and saying, hey, you've taken this money out on the provision through the government that you're having financial difficulty and now you're wanting to use it for a home, they're not allowing to use it. So some lenders are really strict on this, and if you're trying to use this as your deposit, especially if you've got a minimal deposit, they're saying it's an absolute no-go. Now, it's not a blanket rule. Some lenders are willing to look at it on a case-by-case scenario, but by and large, if you've accessed your superannuation and now using it as a deposit, there is a chance that your loan could get declined.
The second thing on what's making loans harder to get approved today is working in specific industries.
That's right, Jayden. The banks are scrutinizing certain industries, specifically in travel or hospitality, especially with all the current shutdowns. They're being tougher on these industries more than ever.
So the banks are actually even flagging specific roles. So if you're a pilot, for example, the system will automatically flag you and be like, careful, Nathan's a pilot, we don't want to give him a loan. So in these instances, you might have to take extra steps, including getting a letter from your employer or just explaining your situation and say, well, actually, we're doing government contracts or whatever, and my job hasn't been affected during the pandemic.
The third reason why your home loan might not get approved is around your income. So a lot of people that are earning commissions or bonuses or have massive overtimes with their income might find that now that the banks are only taking 60% of this income. Traditionally, before COVID, they were taking 80%. So this is another massive reduction, especially when you're looking at your borrowing capacity when the banks are only going to accept 60% of this income.
Yeah, Nathan, let me add to that. It's the same if you're casual. So before the pandemic, a lot of the banks treated casual and full-time employment pretty similar. They're like, well, you're casual, we get it. You've been working casual for the last 3 years. You're basically full-time.
It's all good, man.
Now with COVID, the banks are being pretty critical and they're going to want to see a big history, sometimes up to 2 years of your employment to make sure, well, Nathan's job isn't going to get rocky or they're just going to fire him the next day to make sure you can still afford that loan.
In some instances, the banks are also saying they won't lend more than 80% if you're casually employed. And certainly something that does change from bank to bank, with some lenders being far more critical than others. The fourth reason why it's getting harder to get a home loan is that the lenders have actually reduced the maximum lend that they'll do for certain things like construction. So if you're looking to buy land and build, some lenders are now saying that they won't lend more than 90% of the property value, including mortgage insurance, where traditionally it was up to 95%.
Yeah, why this sucks is if you're potentially a first home buyer, you're gonna get the first home buyer's grant. You're gonna get the home builder grant. You might have a bit of savings. You play at your super, you could have $50,000, $60,000 worth of money that you didn't have otherwise that could use towards your deposit. You go online, you read and say, I can get a 5% deposit, I'm gonna do a build. Unfortunately, it's not the case anymore. Like Nathan said, the banks and lenders are wanting at least 10% deposit. So even in that case, with the home builder grant, they're not even sure when it's gonna get paid. So more than ever, it's important to sit down with your mortgage broker before you even put an application into the bank and make sure you tick all their boxes. If you've got enough deposit, if you're in the right job, to make sure you're gonna qualify and not get knocked back.
The fifth reason why we're seeing loans getting harder to get approved is with guarantor loans. We've had one lender flat out say they're not doing guarantees anymore. We've got existing clients of ours that we're looking to do guarantees for, but their parents' properties aren't valuing up. So this is something to be aware of, especially if you've got mum or dad happy to go down as guarantor. You don't need a deposit. However, there can be challenges with getting that across the line. So Jayden, walk me through some of the questions the lenders are asking when you're doing home loan applications at the moment.
So the bank's asking much more questions than ever, especially in the light of the current pandemic. They're really wanting to get into the weeds on what your situation once was and what it's potentially going to be in the future. So even before you lodge an application, they're going to ask you questions on how you're going to meet your lending obligations. Has your situation changed since COVID? How has COVID affected your industry? How's it affected your hours? And if it has affected your hours, what's going to be the impact moving forward?
The lenders are wanting to understand if there's any foreseeable change in the future that might impact your ability to meet your obligations. It's really important that you answer these questions truthfully. Now, Jayden, I know you've had a client recently access funds from their super. Tell me the story behind this and what happened there.
Yeah, so this was a pretty interesting one. So on the COVID questions, they said, well, no, my work hasn't been adversely impacted. I've still been working the same hours. I'm all good. I haven't been impacted by COVID when they answered the questions to the bank. Then, like Nathan said, on one of the statements that we didn't see, they'd actually accessed their super funds. And the bank came back and wanted to knock back their loan because they said, well, you've straight out lied to me, Nathan. You said that you weren't affected by COVID. You said that your hours have stayed the same. You said you were fine, but you accessed your emergency super funds. And to be able to get that, you said that you weren't in a great spot and you were worried that stuff was going to change with COVID. So you need to be careful when you're answering these questions to be clear about how you're answering them. And you might be able to say, well, while I wasn't impacted by COVID in my work, I was worried that my hours might have been reduced in that 2-week period, and that's why I accessed my super fund. In this case, that was okay, and we managed to talk the bank around it, and they turned around, they approved the loan. But just be careful on this, because the banks are really in the weeds, and if there's anything that they don't like about the application, including missed repayments, which we'll come back to in a sec, they are going to be more likely to knock you back.
So Jayden, we've talked about the reasons why your loan might get knocked back by a bank, but how do I actually increase my chances of getting my loan approved?
Realistically, income and employment are the main concerns for the bank. So the number one thing you can do if you receive a salary to show the bank and give them confidence that stuff hasn't been changed and is going to be fine going forward is to give them much more history of your employment and your work over the last few years. Now I'm talking about giving them at least 2, maybe even 3 years of your tax returns. It'll show that your income's been consistent, that Nathan, you might have moved jobs 4 or 5 times in the last 3 years, but you've always been a geologist and you've been earning this much throughout time.
Yeah, that's right, Jayden. That's the same with things like if you've got a consistent bonus. If the bank can see consistency over a long period of time, it gives them a lot more comfort around your income and your stability as an applicant in the application.
The second way that you can show that you're really secure in your job and you're confident in it is even getting a letter from your employer or from your boss just saying like, hey, Nathan, can you write a letter just saying that these are my hours, this is what you expect my hours to be going forward, how long I've been working there and what the conditions are. It's not something that you necessarily need to do, but like Nathan said, it just gives the banks another layer of confidence that, hey, you've been working at this job for 2 years, you've been consistently earning these hours, and you're actually a really strong applicant.
The third thing to look out for is your existing account conduct. Now, the banks look at this quite closely. If you've got any overdrawings on your day-to-day account, even if it's over by a few cents, any late payments on any credit cards or personal loans, this can all go against you. And now, Jayden, I know you had a customer recently that this actually happened too.
Yeah, so before the pandemic, the banks were pretty flexible on this stuff. Nathan, if you had a couple of missed payments on your statement, if you had a credit card bill that you'd forgotten 1 month because you were traveling, they were kind of like, listen, don't worry, we get it. You missed it, you had money in another account, we're completely fine. Fast forward to today and the banks are jumping at shadows. They do not like the look of even the smallest overdrawing. If you've got a late payment fee, the smallest amount will be enough to derail your home loan. And we had it recently where one of my customers had basically overdrawn his account by literally cents. I'm talking like 1 to 5 to 10 cents a month, but consistently over a 6-month period. And the bank got to the point of almost rejecting his application because they said, well, Nathan, you keep overdrawing your account. All right, we get it cents, but you're not managing your money. You're not a strong applicant and we don't want to give you the money. So you need to be careful of this. Fortunately, we were able to explain that, hey, like actually he's got a bunch of savings in his other account. It was a timing thing. His credit card payment was coming out, then the pay was going in the next day, and there was like a day overlap where it was doing it. But you need to be aware that the banks are really jumping at shadows, and for stuff like that, even though they might seem minor in your books, they're pretty major for the banks, and it can be reason enough for them to reject your loan application.
The fourth thing to increase your chances of loan approval is, especially if you're a single applicant, to try and increase your borrowing power as much as possible. So how do you do that? Well, let's say I'm going for an application by myself. The bank is really concerned because there's only one income that they can rely on. So if your income is lost, there's a chance that the bank could have impairments. So reducing things like your credit card or even closing a credit card to increase your borrowing power so that if you're well under your borrowing limits, the bank gets a far more comfort around your position.
Yeah, now why Nathan's saying this is we've actually noticed, and it's pretty anecdotal, but recently a few of the banks have been a bit more critical, I'd say, on single applicant applications. So if Nathan's applying on his own, he's got the minimum, smallest amount of savings, which is what I had when I bought my first home, and his borrowing capacity was basically at the maximum. So you're putting the least amount of deposit for the most amount of money you could afford. The banks are being more likely to knock that back and say, well, what happens if Nathan's hours get cut a little bit? Or what happens if he misses a repayment, he falls a bit behind, there's gonna be issues. So the way around that, like Nathan said, is we'll close some credit cards. Try and save up a bit more buffer and show them how you're actually gonna be a quality applicant and be in a position to make the repayments on that loan on time.
The pleasure's all on this side of the table, trust me.
So that's it for today, guys. Did you know at Hunter Galloway, we're mortgage brokers and can help Australia-wide. So hit us up at huntergalloway.com.au.